Okay, what's next? Should we do 1-6?
Business, oh yeah, business ethics, yeah.
Let's see here. Let's do 1-8. We don't have 1-8, do we?
No.
In each case, identify on the blank line whether the item is an asset, a liability, stockholders' equity, revenue, or expense. So we're going to first take this and let's just talk about these various accounts. These are all various accounts in what can be called a chart of accounts. And each one is specific as a revenue, an expense, an asset, a liability, or owner's equity. So do they go on the income statement, which is revenue and expenses? Or do they go on the balance sheet, which is the accounting equation, assets, liabilities, equity? How about cash? Asset, retained earnings.
Retained earnings.
The stockholders' equity section.
Oh, yeah.
Cost of goods sold,
Expense.
salaries and wages, prepaid insurance, inventory, asset. Inventory are items on hand that haven't been sold. Think of Macy's. All the clothes on hand in the store is inventory. It's a current asset. When I go and purchase one, it then becomes cost of goods sold. It reduces inventory, and now it's a sold item. Okay? We'll talk about this in a future chapter. What about accounts receivable? Asset. What about sales revenue?
Revenue.
When you see revenue, what is it?
Revenue.
Revenue. Notes payable.
Liability.
When you see payable, what is it? Accounts payable. Service revenue. Interest expense. Awesome. So now what we need to do, we need to prepare an income statement. We're going to take all this information and let's go prepare an income statement here. Okay, I just tried to put them over here so we have them. Okay, so what's the name of the company, guys? Mott Inc. So what am I going to do here? Mott Inc. Let's start with the income statement. What do we have in revenues?
Sales revenue.
Sales revenue of how much?
$584,951.
What else do we have? Service revenue, how much?
4806.
I suppose that'd be common for some companies to break that down, huh? Like, you think like Best Buy,
Mm-hmm.
they fix stuff and then they.
Depending on the materiality of it, usually you have separate line items to see how much is based on selling product, how much is based on services.
A bike repair shop. It also
Exactly.
sells bikes.
How much is purchasing? Well, you want to know really what percent of profits are from different sectors, as long as it's material enough. Material meaning you show it separate. Okay, so our total here, whoops. Oh, shoot, what was that? 4806?
Yep.
So our total revenues will be 589,757, yeah. Now our expenses, what do we have for expenses?
Cost of goods sold,
Cost of goods sold is what?
438, 458.
438, 458. What's next?
Salaries and wages.
If it would have said salaries and wages payable, would it be on the income statement? It'd be on the balance sheet. It's a liability. Okay, salary and wages expense is,
115, 131.
what's next? Interest expense is 1882. Something's wrong. D8. D8 minus D16. No, what am I
You
doing
had a
wrong?
3 in there instead of a D in your formula. 38.
God, it was just one letter. Or one digit.
That's the good thing about Excel, it never gets anything wrong.
It's all
Guys,
there.
do you see, as long as the input, do you see why I like to use Excel, guys? Do you see how it's gonna make your job easier in doing this work? So when you go and do your homework, you can just cut and paste another page just like it. And your formulas are in there. It's just gonna make your job easier, okay? Okay, guys. So we have our income statement. What do we need to do now? Statement of retained earnings? Or is that all we needed?
No, so the income statement and balance sheet.
Okay,
Oh, no, that was taken from the balance sheet.
yeah, so that's pretty much it.
That's it.
Okay,
Yeah, income statement.
Yeah.
good. Okay, does this help you going through these?
Yeah.
Okay, so let's move down. Here's an incomplete financial statement for ready, 9 I believe you have for homework, right? Okay, and you also have 11 and 14, so let's find something that is gonna be similar to that. 11 you've got, 12, no, 13. Let's look at the problem. You have to do 3. And again, all of the solutions to these are in the back of the book, so you can go over them. 3 is one you're gonna do. Let's do 4. No, I don't wanna do cash flow. Let's do in set B, 3. This is gonna be similar to what you had to do. You'll have to do, you know how you're doing 3A or 3-1, the A problem? We're just in class gonna do the B problem, okay? So it's similar to what you need to do. What I'm trying to do for you guys is give you input as to how they work with problems very similar to it, okay? 3. Shaw's Garden was started on May 1st with an investment of $45,000 cash. Following are the assets, liabilities, and common stock of the company on May 31st, 2014. And the revenues expenses for the month of May, its first month of operations. No additional common stock was issued, but a dividend of $1,600 in cash was paid. We need to prepare an income statement and a statement of retained earnings for the month of May and a balance sheet. This is why I wanted to do this problem, because you're gonna have to do a balance sheet. Briefly discuss whether the company's first month of operations was a success. Discuss the company's decision to distribute a dividend. So let's take this information and prepare an income statement first. What's the first statement we always prepare? Income statement. So let's start with an income statement first, with all this information we've got, okay? So if we go and do our income statement, and it's Shaw's Garden,
Are these done, more often than yearly? Or we're just doing yearly?
we're doing yearly because it's,
Every
or
month,
monthly.
Every 2 months, every 3 months, or what?
Well, usually, businesses sometimes want to see weekly sales, definitely monthly, absolutely quarterly. Public companies are required to submit information to the SEC quarterly. So they need to always be on top of their situation. Okay, and this is for the period ending May 31st, right?
Yes.
So May 31st. Now, if you screw up and don't put May 31st, I'm not getting caught up in specifics like that, okay? But understand, it's gonna confuse someone if they're a user of the financial statements. Okay, let's start with our revenues. What does Shaw Company have in revenues?
Service revenue.
Service revenue, 10.4. So I'm gonna take and put in service revenue, 10,400, right? Then we've got, what kind of expenses do we have?
Advertising.
Advertising of 1,800. What's next?
Salaries and wages.
Of,
1,900.
what's next?
Maintenance and repairs.
2,100. And, okay. C, 10, let's see, 14, okay, so we show our income, our revenues of 10.4, our expenses of 6,200 with a net income of 4,200, right? Whoops. Next, we need to prepare a retained earnings statement first, right?
Yep.
Because we gotta do the retained earnings in order to finish the balance sheet too. I don't know why that's not, okay, so basically, our retained earnings starts as what?
Zero.
So our retained earnings on May 1st, started with 0. Then, what did we add? Net income of, and what about dividends?
1,600.
So we have a retained earnings ending balance as of May 31st of 2,600, don't we? Everyone agree? How are we doing? We having fun? Craig? Is it? Craig, are you tired? I'll give you the opportunity to leave after this. I'm gonna keep doing some more, guys, but feel free to leave, okay? So now let's do the balance sheet, okay? You guys ready for the balance sheet? So the balance sheet, I'm gonna put down here. And I'm gotta change the name here, don't I? Balance sheet. Do I say for the year ended?
Is it a period or a month?
As of May 31st.
Oh, it's just a snapshot.
It's a snapshot. You wanted me to do that.
Go to
Do it in the camera now, one more time, please.
So, not for the year ended May 31st. Do you see? It's not for the, you get what I'm saying. Okay. I know, you're gonna,
We're so mean.
I love it. No, we gotta have fun.
Makes you remember it.
You know what? He has no idea what I'm doing next time we all meet together. I'm gonna have so many cameras in here. Okay, what do we do with a balance sheet? What do we start with?
Assets.
Assets. Let's talk about the assets. What assets do we have here?
Cash.
We have cash. What else do we have? Accounts receivable. So cash is 10,800. Accounts receivable is 8,400. What else is an asset? Equipment. How much?
58,800.
So we have total assets of $78,000. Believe me? Next, our next section is liabilities and stockholders' equity. So now we are going to show our liabilities first. What are our liabilities?
Accounts payable.
Accounts payable, you see
4,400.
4,400. What else?
Notes payable.
Notes payable, 26,000. So our total liabilities are $30,400. Okay, now we need to talk about stockholders' equity. What do we have in stockholders' equity?
Would that be the 45,000?
Yes, common stock of 45,000. What else?
Couldn't we just for like if we were trying to figure it out, subtract those to see how far off we were, or is that a bad practice to get
What do you
into?
mean?
Because don't they equal?
They have to equal, absolutely.
So like right now, we could be done, not looking for anything else if they equal.
But,
We know it out.
but we need to lay it out.
Yeah, no, I know, but I mean like,
But you'd know if you're balanced or right. Let's say you forgot about,
so like right now, just looking at it, you know that we're short like $4,000 or 3,600 bucks or whatever,
3,600, yeah.
right?
which would be correct. You would know you're short,
And we
which
go back
would,
to the earnings, so we're short 2,600, right?
well, we should be, oh yeah, you're right, because of the dividends. So yes, you'll be able to know, it clearly has to balance. If something doesn't balance, you're missing something, okay? So our common stock is 45,000. What's our retained earnings?
2,600.
2,600, and that came from,
Statement of owner's equity.
correct. So our total here is 47. So our total liabilities and stockholders' equity is what?
Those two added together.
I
To
guess,
make sure, yeah, to make sure it adds up to it.
our total here would be, better be 78,000 or we're in trouble. 78,000. That makes sense? That is your homework problem, 3-1, is gonna be just like this, okay? Now, we've gone through this problem and you know the process. You're gonna use that same process to do your problem. So if you get stuck, you can go back and listen to this lecture that shows you how it's computed.
I forgot to ask, was the YouTube link in the Moodle?
Is it Moodle? Yes, it is.
The YouTube link?
All of them are.
Great, thank you.
You bet. Okay, now the question is, briefly discuss where the company's first month of operations was a success. So, did they have income or did they have a loss? So they did pretty well, didn't they? So, were they in a position to pay dividends?
Not really. Well, I mean, it seemed like a lot of, I mean,
Usually, I mean, Apple just finally started paying dividends.
yeah, it seems like, I mean, if they just started out, I don't think that you would just start out and pay. Usually, you build up
Correct.
things after a while.
Exactly, because
Yeah.
you need the money, to
Yeah.
add more resources. But in this case, whoever gave them the money wanted a piece of the pie right away. But,
And we don't know this, I mean, for all we know, they could be partial owners. Or something.
Exactly.
Maybe they're not taking a salary, but they
Correct.
get their dividends.
but generally speaking, new upstart companies really shouldn't be paying out dividends, should they? They really need to have that money for themselves. So guys, this is pretty much the nutshell of what chapter 1 is all about. I really think we're good to go. The key you want to be aware of is to